Has Bitcoin formed a head and shoulders pattern suggesting a deep decline, or is it just a false pattern meant to manipulate the market? Are you curious about the answers to these questions? Stay tuned. Hey there, welcome to another episode of Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and the altcoin of your choice. We meet up, and as you already know, we take a look at the charts from three different perspectives: technical, on-chain, and of course our fantastic fire charts. As a result, you simply won't find such condensed analytical knowledge anywhere else on the internet as what we serve up here. We know you appreciate that. Thank you so much for all the subscriptions we've received so far. We're close to 62,000, but at the same time, I know that a lot of people who watch this material, or previous ones as well, aren't actually subscribed to this channel, so now is the perfect time to hit that subscribe button, leave a like, and drop a comment, even if it's just for the contest. And remember a very important thing: the content in this material absolutely does not constitute investment advice. For advice, consult a licensed advisor, or just do what I do your own research. If you acknowledge that, grab your coffee and let's dive into the charts. And on the Bitcoin chart, we're seeing a real revival. We saw Bitcoin drop to around $108,000 and then bounce back up. It bounced higher, and with that move, basically yesterday, it confirmed two moving averages that had been acting as significant local resistance. We're talking here about the 50-day moving average, which is the red line, and the 100-day moving average, which is the yellow line. As we can see, Bitcoin broke through these moving averages with a very dynamic upward move already on Monday. Yesterday, which was basically Tuesday, it struggled with them for most of the day and still couldn't confirm them yet. The price was fluctuating along the wick that we can observe here. But fortunately, at the very end of the trading session, close to 2 a.m. Polish time, the price closed well above these moving averages, which gave us confirmation that they now serve as support. The market reacted dynamically to this, and as we can see, on October 1st of this year, this is so far quite a decent breakout, which at the time of recording this material is hovering around a 2% increase. At the same time, we can see that in this case, Bitcoin is breaking through a local downward trend line. Admittedly, this downward trend line is not yet confirmed because we only have 2 points here. I was expecting a third point here, which could hypothetically occur. Fortunately, so far we haven't seen a reaction to this line and it has been broken through. Interestingly, I've noticed that the T-sequential indicator has recently been giving us fantastic, truly phenomenal signals on Bitcoin because it perfectly identifies both the tops and the bottoms. We saw such tops here, which were marked, for example, during this consolidation, after which declines followed. Another top, which was indicated by the indicator by the 9th candle here, was followed by declines, and now we have two rebound points. Here is one from a few weeks ago, and here is the second one, which basically triggered the upward trajectory we're currently observing. Well, this upward trajectory means that Bitcoin may, of course, encounter another resistance. If the downtrend line, our hypothetical one, of course, gets broken, then we have this area between $17,200 and $17,900, which is the wick of this candle, where we could actually encounter stronger resistance. They also coincide with this peak that we can see here and with this consolidation zone that we saw here. If these levels are broken, then the next resistance will be the previous all-time high, which is somewhere around $124,500. So really, really high. So the breakout could be very dynamic. This breakout could mean that basically after just a few days, we might reach values close to the all-time high and start wondering whether there will actually be a rebound from there or not. As you know, Kanga Trends is served once a week, every Wednesday, but if you'd like to stay up to date with information like how the indicators are behaving, or for example, whether the RSI is showing any divergence, or maybe the TD sequential is signaling a trend reversal, I'll definitely keep you updated about it on my Twitter, so I encourage you to follow me there. In the meantime, let's check what exactly is happening with the RSI, since we've already mentioned it. And it's worth noting basically two things. First, we have some momentum here, which is bullish momentum, but it's not a typical bullish divergence. Why? Here we have a price movement that, counting from the lows, is moving upward, while the movement on the indicator is heading downward. Here we have a kind of discrepancy. A typical RSI divergence spans a 14-day period. Here we have a longer time frame, so it's not a typical divergence, but simply a momentum divergence, as we can call it here. Nevertheless, this results in Bitcoin breaking out. Obviously, I can see very clearly here that if Bitcoin were to fall below the value of $108,000 and close a trading session below these levels, then in this case, this divergence, this discrepancy would be invalidated here. However, at the moment, this is not happening, and there is no indication that it will happen. Therefore, from this perspective, we can definitely say that this is a factor that gives us the sense that the bulls are taking control of the market. And in addition, we are observing the RSI breaking above the 50 level, which means we are once again in bull territory. We have been waiting for this moment for a very long time. It has happened, and currently, as long as we remain here, the value of 50 was essentially confirmed yesterday as our potential support. As long as we observe this, there is a possibility for the price to break out to ever higher levels. Furthermore, if you are looking at the indicators on the weekly chart, it's worth noting that we also have certain divergences here. Firstly, we have a long-term momentum divergence, which indicates a downward trend here, meaning that these purchases are, of course, becoming more famous over time, but at the same time, we have a bullish RSI divergence, and here we have a classic divergence, a classic hidden RSI divergence, but in its classic form because it fits within 14 days, which could result in Bitcoin simply rising locally and possibly attacking the current all-time high area. So will Bitcoin drop to 91,000? Because after all, on the Bitcoin chart, at least theoretically, we can observe a head and shoulders pattern suggesting such a deep drop, meaning more than 20% from the current price. This question was asked to me on Twitter, and let me clarify right away, no. We are not dealing with a head and shoulders pattern here. Why? Because this pattern, regardless, right now it's not drawn out, but we'll get to that in a moment, regardless of how we would draw it, whether by candle wicks or candle bodies, is absolutely not well formed. Moreover, in the case of a head and shoulders pattern, we take into account a very important factor, which is volume. Many analysts completely forget about this, but it's worth taking volume into account because it either confirms or contradicts what we observe on the price chart. We might have a certain fractal that resembles a head and shoulders pattern, but in reality, it doesn't have much in common with it, because in a situation where we actually had such a formation suggesting a trend reversal from upward to downward, the volumes should also be strongly declining. In this case, we absolutely do not observe such a scenario. Moreover, if we switch directly to the price chart, let's try to draw such a hypothetical formation, or at least a neckline, which I'll draw, for example, like this, because this is basically the kind of formation we're talking about here. And let me clarify right away that I'm not taking into account the wicks of the extended candles, but in this case, only the bodies. So I'm aligning our line accordingly to the point where the price closes. Why? Because in this particular case, in my opinion, it stands out clearly. And note, here we are dealing with the left shoulder, actually a double one. We have a double head, which is very irregular, and then another shoulder, which is smaller. And in fact, here it could actually confirm such a line, such a formation. But at the same time, we saw that Bitcoin dropped below our neckline, that is our yellow line, and then very dynamically broke upwards, completely invalidating this formation. Invalidating it. So is this a head and shoulders pattern? In my opinion, absolutely not. Besides, it has already been invalidated. Is this market manipulation? In my opinion, absolutely not. It's simply just an incorrect reading of what's currently happening on the chart. Before we move on to Bitcoin fire charts, I would like to sincerely thank you for the comments that appeared under the previous video saying that you are casting your votes for me during the InvestCavs nominations. Thank you very, very much for that. And just a reminder, voting is still open for a few more days. And remember that Kanga has been nominated in as many as 3 categories. Above all, please pay attention to the Lawyer of the Year category, where Maciej Grzegorczyk is a candidate. Also take note of the Web3 Exchange category, where Kanga is, of course, a candidate. And finally, the Web3 Market Analyst category, where I am still in the running. And I warmly encourage those of you who haven't voted yet to cast your vote for me. If you do, let me know in the comments so I can thank you personally. And the link to the contest is pinned right at the top of the description of this video. Here's what the order books of the world's largest currency exchanges look like for Bitcoin. And here we see our blue line, which represents the price of Bitcoin, along with some horizontal lines. The horizontal lines above the blue line are sell volume lines. The brighter they are, the more volume there is. And the buy volumes are the ones below the current line. Similarly, the brighter they are, the greater the volume. And what we notice is that Bitcoin is currently hovering somewhere around $116,000, $116,000, $115,000. And above the current price, we have very large clusters of sell volumes, or in other words, there are a lot of them, but their actual values aren't high. Because as it turns out, when I move the cursor up, we notice that these volumes reach a maximum of about $10 million, and only around the $120,000 mark do they exceed the level of $23 million in Bitcoin waiting to be dumped on the market once that value is reached. So really, in my opinion, even though this distribution here looks quite dense, it's actually relatively easy to break through. On the other hand, below the current price, we have this dark area. This dark area indicates that currently there aren't any new buy orders appearing here, but they start to show up at just under 113,000. Further down, for example, we have a larger concentration around 111,000, but keep in mind there isn't that much volume here either, because at $111,000, there are only 7 million in stablecoins waiting here to buy Bitcoin in case of any potential turbulence. However, let's remember that the momentum is quite strong, so I expect that these buy orders here will be replenished. And when it comes to defending Bitcoin from deeper turbulence in the event of a downturn, well, from the value of $108,000 down to $105,000, we also have quite a lot of these buy volumes, and they are distributed quite densely. Considering who is currently buying, it's worth paying attention to the CBD. And the CBD shows us the brown line. The brown line represents the whales who are currently really significantly steering the market. And finally, compared to last week, we see a certain change here. They are starting to be followed. Other wallets, we see the purple wallets, which are the second largest, those that hold between $100,000 and $1 million in their balance, specifically to buy Bitcoin. And we also see the red line, which is leveling out here. These, in turn, are wallets holding between $10,000 and $100,000, basically for the purpose of buying Bitcoin. Interestingly, the orange line represents retail investors, that is, wallets holding between $100 and $1,000. Currently, they remain on a downward trajectory, so at least in the short term, these wallets are not interested in buying. That doesn't mean they're selling. That's actually not the case. While Bitcoin has already overcome most of its significant resistance levels, the situation with Ethereum is quite different. Ethereum still has its resistance levels ahead of it. And here, once again, I'll refer to a certain person, my namesake, who pointed out on Twitter that perhaps Ethereum is forming a head and shoulders pattern here. And note, in this case, the pattern is actually legitimate. It was different with Bitcoin, but with Ethereum, that's actually the case. Here, unfortunately, we are dealing with a legitimate pattern that could result in a drop even down to $3,600. Ultimately, Ethereum took a dive, but it hasn't reached that value yet. That could still happen in the future. Nevertheless, let's pay attention to the volume, which could potentially confirm this situation for us. And we can see very clearly that here we have one shoulder, here we have the head, here we have the other shoulder. And along with this pattern, in fact, the volumes are dropping, which means the pattern is confirmed. What's more, we can see that the neckline has just been broken, the 50-day moving average, our red line, has been lost, and Ethereum has plunged to a value close to the 100-day moving average, which is our yellow line. Additionally, it remains below 50, or actually right at 50 on the RSI, which basically means we're at a decision point. We've also talked very often about the TD sequential indicator. As we saw with Bitcoin, it works literally perfectly. However, in the case of Ethereum, it gave a premature signal. We saw declines here that occurred after the 9th downward candle. These declines were quite radical, I would say, as they amounted to almost 6.8%. Since then, we've seen a rebound, and indeed, if someone bought Ethereum below the value, or from the value of $4,000 and down, they're definitely in profit right now. I was also among those people, because I saw that these were buying opportunities here. Nevertheless, I still approach Ethereum very cautiously at this point. Above all, I'm focusing on how Ethereum will react to the 50-day moving average, and later on to this neckline that we're observing here. If it bounces down from there, then I would expect that the 3,600 level will actually be reached. On the other hand, if this level is broken through, while also smoothly retesting the RSI from above, then I would expect increases here and an attempt to reach a new all-time high. That's why, when it comes to Ethereum, I am very cautious. At the moment, I rely heavily on indicators and wait for them to tell me exactly what to do at any given time. The confusion and uncertainty with Ethereum can also be seen on Firechash, where the Firekai themselves don't really tell us much, but the CVD gives us a lot of information. We can see fairly flat lines here on our chart, and we also see whales that are in a completely sideways movement. Theoretically, they're buying something, but the pace of these purchases isn't high at all. Besides that, the purple lines, or for example, the green line or any others, even the retailers, here the orange line, I see that they were buying as recently as 2 days ago, but currently they're more observing the market than actually participating in it. In my opinion, Bitcoin is behaving in a fairly clear way. We can see that Ethereum is sending out some signals of uncertainty, despite the current moment we're observing on the chart today, but there's also Solana, and in my opinion, Solana is somewhere between the two coins. Solana is your pick for this episode, our chosen altcoin. And as we can see with Solana, we had a very strong resistance here, which is this gray box we've had drawn here for a very, very long time, from which there was a bounce and then a decline that basically reached values well below the 50-day moving average. Theoretically, these declines could have continued in a very dangerous way. Fortunately, there are a lot of buyers in the case of Solana, and we can see a significant breakout here, which even resulted in the appearance of the 8th consecutive bearish candle on the D-dispensal indicator chart. Well, it's a pity it wasn't the 9th. We always prefer the 9th, just like here, for example, because they tend to signal turning points on the charts very well. However, it's worth remembering that here too we had an 8 right at this peak. Then that peak was pushed even higher and declines followed. So here we have a chance that the trend is reversing into an upward trend. Therefore, if the 50-day moving average on the Solana chart holds and is confirmed as support tomorrow, I see a strong chance here for Solana to soar into the area somewhere between $245 and $270. But to be 100% sure about this, I prefer to watch one more indicator. And again, it's the RSI, because right now Solana's RSI is around 50. It's doing exactly the same thing as Ethereum. However, if Solana, as I mentioned, if it breaks above the 50-day moving average and at the same time breaks above 50 on the RSI and confirms it, for example, tomorrow as support, then momentum should follow and Solana should actually break upwards. That's why, in my opinion, the RSI here is very important. The RSI on Bitcoin is very clear. It gives us a very clear indication of what to do. On Ethereum, it's sending worrying signals, and on Solana as well, but these worrying signals, when combined with other factors, indicate that in the case of Solana, this momentum could actually occur in this case. And the theory I just presented is confirmed by fire charts, or more precisely by the CVD on fire charts, because the fire charts themselves don't tell us much here. We see resistance at the 220 level, and that's basically it. But apart from that, the CVD very clearly indicates that basically everyone is currently interested in Solana. Theoretically, we can see that these lines are also similarly flattened, just like in the case of Ethereum, but if we look from a broader perspective, they are actually on a multi-day upward trajectory. It's a fairly relaxed but still upward trend. Whales, represented by the brown line, are buying and buying aggressively because they're already basically at the top of our chart here. The other wallets shown by the green line are also rising very nicely, and they've been climbing for the past few days. The red line, same thing, and the purple line, which represents the second largest wallets, are also rising. Retail investors are behaving quite interestingly as well. That's our orange line again, and they actually experienced a drop just yesterday. That is on Tuesday, and now we can see that they're bouncing off that bottom and are also at least on a short-term upward trajectory. And if you'd like me to analyze your altcoin, remember, it's a very simple thing to do. All you need to do is register on Kanga. The registration link is in the description of this video. Look through the cryptocurrencies we have and choose the one you believe in and that interests you the most. Just remember the 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be Kanga itself. And third, it can't be any meme coin. So the comments are open. Please let me know there which crypto you would like to see in the next video. ETFs are back in the game. Before the 100% decision in the United States, we saw that ETFs were buying, and those were the volume bars that I've marked here at this point. After the 100% decision, specifically regarding the rate cut, which is favorable for the market, we noticed sell-offs, and those were exactly these volumes. However, for the past 2 days, we have been seeing purchases, and these purchases are returning to high volume levels. So in terms of ETFs, demand is not decreasing at all. In fact, at this moment, it may actually be increasing. It's time for on-chain, and today I've prepared 4 indicators for you. We'll start with SOPR, which is one we used to present quite often, but recently it hasn't been featured on Kanga Trends. Nevertheless, we're bringing it up today because something interesting is also happening with SOPR. We saw that recently SOPR surged to very high values, suggesting that we might have been dealing with a local peak on the Bitcoin chart, and now we're seeing declines. Declines that are approaching almost to the level of 1, which is the area that marks the boundary between selling at a profit and selling at a loss. Very often, Bitcoin reaches these values in order to bounce off them and continue its upward trajectory, but it doesn't always have to reach them. As we can see during such upward trajectories, like in 2024, for example, it didn't always touch the 1 level. Now we might be dealing with a very similar situation. On their SOPR, we've dropped very low, but at the same time, we don't necessarily have to touch the 1 level, which could mean that increases may follow soon. The fact that the SOPR spiked so high was also caused by the presence of a large number of dormant wallets that, after years, started selling off their Bitcoins. And we could observe a similar situation on the Coindays Destroyed chart, or our CDD, where at a certain point we can see these very tall bars. Here, I'm now expanding the chart to its full width. And suddenly, in the last few months, basically between June and August, we saw very high spikes. What does this mean? It means that there were certain Bitcoins that had been held in one place for a very long time, and then they were transferred to exchanges in order to sell them. And that was the destruction, or at least so-called the destruction of hodling days. These bars that are highlighted here represent exactly the destruction of long holding periods in a single wallet, and basically the transfer of those Bitcoins to other wallets. And we can see that recently, even though there are still some reports about dormant wallets that could be activated, at the moment we don't see any major movements around them. So from this perspective, I am absolutely not worried about any sell-offs caused by such movements. By the way, it's worth paying attention to NUPL, or Net Unrealized Profit Loss, which is unrealized profit and unrealized loss, a kind of indicator of critical deviations that we will definitely refer to often in the future when we talk about Bitcoin potentially reaching its peak value, which in the past was a very accurate indicator. Every time Bitcoin broke above the value of 0.75, it indicated that it was reaching most likely the peak of its price. In the last bull run, this peak was reached around 0.74, so 0.75 was no longer touched, but still, it was a value close to the threshold, which is why it was worth paying attention to. In the current bull run, however, the threshold value that Bitcoin regularly reaches is around 0.63 to 0.64, and currently Bitcoin is at a value of 0.52, just under 0.53, so there is still a lot of room for growth here. If there is to be a lot of room for growth, it would be good for the amount of Bitcoin on exchanges to decrease. And this is an indicator we mention quite often on Kanga Trends, which shows the Bitcoin balance on exchanges. And we talked about the fact that we had a 2-month upward trajectory on this indicator, followed by a potential trend reversal. In recent days, we also discussed that we had a spike in these values, and attention, we are now seeing dynamic declines that have appeared over basically the last 2 days. And these are factors that may indicate that Bitcoin could break upwards again. It's time for a contest, so let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or Solana. Present a technical, on-chain, fire chart, sentiment, or fundamental perspective, whatever you like. And remember, you don't have to agree with me. The author of the most interesting comment, which is posted under this video by Friday at midnight, will win. And the winner from the previous episode is Lukasz E3D8G, who analyzed Ethereum. Congratulations, fantastic comment. Please contact support to claim your prize. That's all for today. If you enjoyed this and you're here for the first time, be sure to subscribe and join me again next week. And of course, if you see value in what I'm offering here, I would be extremely grateful if you voted for me in the InvestScouts competition. And I have one more request for you. As usual, please rate this episode on a scale from 1 to 8, where 1 means it was weak and you do not want to see more, and 8 means it was fantastic and you want more of this. And if you do want more, see you next time. Bye.